If you ordered a thorough look at the DoorDash IPO, well, I'm your Dasher, delivering it right to your screen and right on time, before the company starts to trade. Not looking for a tip, but I will take a... Welcome to Healthy, Wealthy, and Wise, the channel that has evolved to talk about all the big and not so big companies going public, whether it's by traditional IPO, a SPAC, or direct listing. As always, I want to thank everyone in the community for your fantastic support. And for those of you new here, my name is Kevin, and I want to welcome you to the channel for the first time. And if you end up liking this video, we'd love to have you join our community. It's totally free, you just got to press that little red subscribe button. So let's get to DoorDash. We've talked about them in previous videos, including a very thorough look at the IPO filing the day it was released. If you missed that video, I'll link it for you in the description. I'm not going to repeat everything from that video, but I do want to hit some of the major highlights. Plus, for something new, I want to share with you how the company actually makes money from each order. And then we'll close out the video by talking about details of the actual IPO and then discuss some considerations of DoorDash in order to help us decide if investing in it makes sense. After that, I'll let you know what I've decided for myself as to if I will or won't be investing into the company. Now, when doing these types of analysis videos, I first like to take a look at the background of the company and the product it sells. After all, without understanding that, you're just looking at numbers without the context. So starting off with what most of you, okay maybe all of you already know, up to this point, DoorDash has built its business by being focused primarily on the delivery of food from restaurants, and they do this through a digital platform that connects you to people who will deliver the food straight to you. What you may not know is that they started in California back in 2013 with their first delivery. And in the years that followed, they've done it better than some of their well-known competitors, such as Grubhub and Uber Eats. DoorDash has become the largest and fastest growing business in the U.S. local food delivery logistics category, with a 50% U.S. category share and a 58% category share in the suburban markets. As you can see on your screen, the company's share of the market grew from just 17% in January of 2018 to get to that 50% that they're at today. According to the company, DoorDash connects over 390,000 merchants with over 18 million consumers by way of over 1 million Dashers, or what they call the independent contractors who deliver for them in all 50 states of the US, including Puerto Rico, as well as in Canada and now in Australia through their digital platform, completing over 900 million transactions. Let's take a step back, because if you're like me, you're wondering how they actually make money. Because we all knew someone, or maybe we were that someone, that delivered pizza growing up, and the way we understood it was that they made most of their money on the tips. And now here we have a third party in DoorDash that has entered into the equation, and now they have to get their piece of the pie as well, so to speak. According to DoorDash, they generate the majority of their revenue from fees paid by consumers and commissions charged to merchants for orders completed through their marketplace. Merchants that have entered into contractual agreements with DoorDash pay the company a commission fee to support the services they provide for them and their customers, as well as to provide earning opportunities for Dashers. However, they don't charge commissions to non-partner merchants, which are merchants that receive orders on the marketplace but have not entered into a contractual agreement. However, that percentage is fairly small, because for the 9 months ended September 30th, 2020, over 95% of the marketplace gross order value was generated from partner merchants. And as part of the marketplace, DoorDash offers partner merchants services such as marketing solutions that allow partner merchants to create demand by funding promotional discounts to consumers. DoorDash generates revenue by collecting per-order marketing fees from merchants. They also charge partner merchants upfront activation fees related to onboarding services and equipment. The company additionally collects revenue through fees paid by the customers who order from merchants on the marketplace. For each order, consumers pay a fixed delivery fee, as well as a variable service fee based on the total dollar value of goods ordered. So looking at a sample order, you get an idea how the money is split up. As you can see on the screen, the person ordering the food is charged a total amount of $32.90, which consists of the dollar value of the food ordered, which is $22.40, the consumer fees, which we just talked about, and those come to $5.50. And of course, there is the tax, which is $1.70, and an optional tip paid to the Dasher of $3.30. So on this order that would cost $24.10 to pick up, the customer is paying an extra $8.80, or about 37% extra for the convenience of getting the food delivered right to them. After the full amount of $32.40 is taken in by DoorDash, they then charge the partner merchant a commission fee based on an agreed upon rate applied to the total dollar value of goods ordered. So in the example, They forward $20.10 to the merchant, which consists of $22.40 for the items ordered and $1.70 in tax, minus the commission and fees, which in this example is $4. And that's the money DoorDash keeps for itself. And then based on the estimated duration and distance of travel and desirability of the order, as well as any promotions available at that time, they determine how much to pay the Dasher. As a result of some negative publicity you may have heard about, they do now provide 100% of the tip to the Dasher, something they previously didn't do. So after all is said and done, the Dasher makes $7.90 and DoorDash itself makes $4.90. So for the convenience of delivering food to you, the merchant gives us some profit to get the order, and the customer pays an extra fee of $5.50 aside from any tip. Now, one of the interesting things about their model is how effective they are in keeping customers once they get them to try their service. As you can see on the screen, for each cohort or group of new customers in a particular year, their spend starts off at a factor of 1. And then for each following year, you can see how much more they spend with DoorDash, which are at increasingly higher rates as time goes on. And then the company also has progressed to generate revenue from membership fees paid by consumers for Dash Pass, their subscription membership program, which DoorDash launched in 2018. With this program, customers can pay a flat monthly delivery fee for unlimited deliveries from eligible merchants. Currently, the cost of this membership is $9.99. Dash Pass subscribers pay 0 delivery fees and reduced service fees on orders from Dash Pass eligible merchants. Right now, these deliveries come primarily from restaurants, but going forward, the company envisions the membership program becoming a primary way for a member to access not only restaurants, but all the local businesses in their community. And in doing so, will receive benefits while shopping in store, at home, or anywhere in between. In fact, just today, I saw a commercial from Macy's that mentioned DoorDash as an option to get an order to you. Then as of this September, they reported having 5 million members of the program. The program should only help drive more orders and encourage loyalty to using DoorDash as compared to its competitors. So what does this all mean? Well, ultimately that's where the financials come in. So from the filing, we can see for all of 2019, DoorDash reported revenue of $885 million. And then that substantially grew through the 9 months ended September 30th of this year when they generated revenue of $1.9 billion. And then in the same periods of time, their gross profit grew from $335 million to $944 million, which isn't to say that they're profitable overall because they're not yet when looking at more than a single quarter. And to that point, as far as their net gain or loss goes, the company had a net loss of $667 million in 2019, which came substantially down to a loss of $149 million during the first 9 months of this year. And then for adjusted EBITDA, that number grew from a negative $475 million in 2019 to a positive $95 million, also in the 9 months ended September 30th. So the numbers are all going in the right direction, but of course, the caveat is how much of that growth is from the pandemic economy and how much of it will be impacted once things get back to normal. We'll come back to that question, but when comparing 2018 and 2019, you can see, before the impact of the virus, the company's revenue grew threefold from $291 million to $885 million. And within that revenue, the growth in actual numbers of orders for DoorDash more than tripled from 83 million orders in 2018 to 263 million orders in 2019. That growth obviously was driven by the company picking up market share as we talked about earlier, but also by more and more people using these services in general. And again, that was before the pandemic was a factor or consideration. Going forward, DoorDash believes that they are still in the early phases of even a broader market adoption. As the category leader, U.S. consumers on their platform represented less than 6% of the U.S. population as of September 30th, 2020. And for more stats, in 2019, the company reports having generated gross order value on the marketplace of $8 billion. In the same period, over $302 billion was spent off-premise at restaurants and other consumer food services in the United States. So when considering future growth prospects, this represented less than 3% of the off-premise spend, which DoorDash sees as highlighting the large addressable opportunity ahead of them in food delivery alone. And we say alone because, as we've talked about, they are also beginning to expand into other areas beyond food. As the CEO provides guidance to the future, he states a vision to transform the way local merchants do business and enrich the communities in which they operate. And to execute on this vision, they have 3 strategies they plan to implement. The first is using their on-demand platform to be used to deliver any item. So yes, that means not just food, even though they expect a lot of continued growth from just food delivery itself. And again, that's something we've already seen, as I mentioned with Macy's. Their second strategy is to provide services and solutions to merchants that will enable those merchants to solve challenges such as customer acquisition, delivery, insights and analytics, merchandising, payment processing, customer support, and to fulfill demand generated through their own channels. This could be something very beneficial to smaller businesses that don't have data analytics capabilities. And lastly, DoorDash wants to leverage the use of its DashPass membership program to make it easy and affordable for consumers, ultimately resulting in brand loyalty and more deliveries. So that's where the company sees itself heading into the future. Now, there are some risks to the business. One big one was averted in California when voters passed Proposition 22, which allows Dashers to continue to be classified as independent contractors, thus keeping the company from being responsible for all the regulations and costly requirements that having them labeled as employees would entail. Obviously, this measure is limited to California, so there could be similar legislation proposed in other localities. Another risk is that DoorDash's ability to include non-partners on their platform could be negatively affected by bills such as one in California, which is expected to be signed into law and becomes effective on January 1st, 2021. The bill would prohibit food delivery logistics platforms such as DoorDash's from facilitating deliveries from restaurants in California without the restaurants' prior consent. Similar prohibitions have also been enacted in Louisiana, Denver, Colorado, and Tucson, Arizona, and are being contemplated in other jurisdictions. As to the reasons for going public, DoorDash lists the principal purposes of this offering as to increase their capitalization and financial flexibility, create a public market for their Class A common stock, and enable access to the public equity markets for them and their stockholders. And really, could there be a better time for them considering the state of the world that has allowed them to generate record numbers of orders and revenue? They intend to use the net proceeds from the IPO for general corporate purposes, including working capital, operating expenses, and capital expenditures. Additionally, they say they may use a portion of the net proceeds to acquire or invest in businesses, products, services, or technologies. However, they do state that they don't have any agreements or commitments for any material acquisitions or investments in place at this time. And as to dividends, as common for most fast-growing companies, no surprise here as they don't plan to offer a dividend anytime soon, instead putting their earnings back into the company for the purpose of continuing to grow the business. Before we get into some analysis of the company, let's go over the details of the IPO itself. And I always like to remind you that pricing and IPO dates often change, so keep an eye on that. If something changes after I release the video, I'll update you guys with either a new video or a community post. In fact, DoorDash just recently increased its expected trading range, up from between $75 and $85 initially to now $90 to $95. The company stock will be listed on the New York Stock Exchange under the ticker symbol DASH. If they do end up pricing at the midpoint of the range at the 33 million shares they plan to offer, they would stand to raise $3.1 billion. And if that happens, it would give the company a valuation around $35 billion on a fully diluted basis. For some comparison, DoorDash's last private evaluation was $16 billion as recently as of June, so they're ambitiously looking to more than double that number off the heels of the rapid growth they've seen from the pandemic. As far as to when they anticipate to start trading, that day looks to be Wednesday, December 9th. Okay, so that's the background and the details from the filing, leaving us to come up with a decision if investing in the company makes sense. This is probably a good time to remind you that I'm not a financial advisor, and while my videos are meant to be informative, they should not be seen as a recommendation for you to take any action based on the information or the personal opinions I share. You should always do your own research or consult with your own financial advisor when making any investment decision. Alright, so in the first video I had on DoorDash, there were two big considerations I mentioned. One was, I asked how much of their growth was a result from the pandemic, and with that, how much of that will last once the pandemic is over. The company has shown prior to the pandemic that once people begin using the platform, they tend to continue using it. Now today, we talked about the premium that a customer has to pay for each order, and I wonder if they will continue to pay that, especially as things begin to open up. From a pure takeout or pickup perspective, I would expect those that have already used the service to continue using it. I really see the value in the service at an office where everyone can order lunch without one person having to go out to pick it up. Well, that's for businesses that haven't transformed to working remotely permanently, which many won't as the pandemic subsides. And I think there is an opportunity for an aging demographic that is less mobile if they can succeed in making it easy for older people to use the service. The good thing is that a higher percentage of 80-year-olds today can use the internet better than 80-year-olds 10 years ago, and that should continue. But I would expect a decline in overall use of the service per user, not so much for use in more of the fast food restaurants or again in the pure takeout market, but more for the more expensive restaurants that most people like to go to for the social aspect of eating out. And I really think that once the pandemic is past us, it might take a while, but people will start to feel comfortable again dining out at some point. The DashPass subscription could help to keep orders up, and I could see a higher adoption to using that service, but there could be a downside to that, which I'll get to in a minute. The challenge for DoorDash will be to continue to grow and getting new customers to the service, and I think they will have a good chance of doing that. Now the second consideration, and what I said before I feel is the bigger one, and I still do, is how does the model make sense for all three pieces of the puzzle? That being the restaurants, the customer, and the Dashers. So you might remember that I asked in a previous video, how can it be a win-win-win for all three? And what I was asking was really a question of margins. For instance, if the price for the delivery is low, then the customers win, which will lead to more orders for the restaurants, so they win too. But to keep the price low to drive the orders, then the Dashers might see less money, resulting in less people willing to deliver or choosing not to deliver at special times or specific locations, resulting in a poor experience for the customer and the restaurant. To keep the Dashers happy, they have to be compensated at a level that makes it worth their while, which would likely result in higher delivery fees, and that in turn could turn off some customers from using the service. And if the merchants are charged more, could they ultimately leave the partnership and explore adding a dedicated delivery person to their staff that would ultimately be more cost effective? Especially if growth in takeout orders over the past year can justify that. And the other thing that can affect the margins is competition. So even though DoorDash has market share growth over Grubhub and Uber Eats, if those companies get aggressive and significantly undercut DoorDash's price, a significant number of customers will go for the better price. Now to combat that, DashPass will help maintain use of the service with it basically being a loyalty program, but I see that cutting the margins even lower because as we discussed, DoorDash subscribers pay zero delivery fees and reduced service fees on orders from DashPass eligible merchants. Obviously, there's value in not needing to continue to market to old customers, but by how much if they use the service a lot. An argument to this is always the scaling of the service, but I feel that availability of Dashers will be dependent on how much they can make, and that will also stress the margin. It's really going to be walking a tightrope when it comes to pricing. DoorDash is researching the use of drones, which would obviously impact labor expenses, but I don't see that coming to fruition anytime soon to have an immediate impact. So what do I personally think? At the end of the day, I like what DoorDash has done to offer a convenient service to people, and one that I hope will continue to evolve. What I'm not seeing is a consistent path to profitability with the headwinds of labor costs, tight margins, and an opening up of the economy with release of vaccines starting to have a significant impact in the first half of next year. For me and only for me, so don't take this as a recommendation, but I'm sitting this one out. For now. As I said, I like the company and I hope it succeeds because of the value it can bring to people, particularly to older people and those with disabilities, a convenience factor for a lot of people who can afford to pay for it, as well as it provides a way for Dashers to make some money, but just am not seeing it as being one that I would invest in without seeing something added upon the model to get it to profitability. Now I'm very open to see how they adapt and could see an opportunity for myself to invest in the company at a later time. I've actually thought of a couple of things that might be worthwhile for them to look into, but these are just my own thoughts, not actually what the business is currently doing or what they have planned to do, so I can't factor in any of that. For those of you that disagree with where I'm at, I had a good discussion with Maria in the comments about DoorDash, and in that discussion, I admitted I never thought that bottled water would have become the success that it did. I just never believed that people at a mainstream, widespread level would pay for water when it comes from the tap so much cheaper and more regulated, and I was wrong there, and I could be wrong here. But even in that case, those companies, many of them like Coke and Pepsi, already have the existing setup to make it work without the tricky labor aspect that DoorDash has to deal with, which is where I keep coming back to and get stuck. Obviously, a lot of you are here because you like the company and probably don't agree with me. But that's okay. Remember, it's just my opinion, and if you believe in DoorDash, don't let me sway you one way or another. I just want to give you something to consider, and at the end of the day, I always want you to do what you feel is best for yourself. So with that, what do you think? Am I missing something? Let me know in the comments. I'll be the first to say I don't have a magic ball to see the future, so even if we disagree on investing in DoorDash, let's agree that we can discuss it respectfully. I'm always open to learning something that could change my opinion. Oh, and that reminds me, for talking and expanding more on our discussion about DoorDash, I hope you can make it for our live stream on Thursday at 7 p.m. Eastern, where I plan for us to discuss all of the week's big IPOs, including DoorDash, Airbnb, and C3AI, and how they ended up trading. It's been a while since we held a live stream, but I'm looking forward to it as I really enjoy the real-time interaction. Anyways, I hope you enjoyed the video, and if you did, please press that like button and share with your friends and on any of your social media sites and forums you're on. Anything you can do to help me grow the channel will allow me to justify putting more resources towards it. And again, if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free. You just got to press that little red subscribe button. We'd love to have you on board. Until next time, thank you for watching and have a great day.